Well, good morning, members of Quantuma. It's my privilege, Mark Lloydbottom, to be able to share with you this morning and talk about something which, thank you for signing up. Did you perhaps have a modicum of sort of curiosity as to whether somebody who is also an accountant can actually help you improve your profitability? Well, here's what I want to say to you. Give me these 3 hours and it's my guarantee that you will gain some massive benefit in terms of how you manage your practice. We're going to whiz through the slides fairly quickly, and there is coming at about 20 to 12 the manual that I have produced specifically for Quantuma to go through this course. And all of the highlights that I'm sharing with you are in your manual. So for those of you that haven't come across me, very briefly, I qualified with Deloitte in Southampton, and eventually I moved over to Bristol, where I live now, and started my own accountancy business. I ended up, it was only a very small business for some of you, but I ended up employing 55 staff. We had 3 partners and about 7 managers, and we built up a practice that I think at one point in time was described as the fastest growing accountancy business in Bristol. And that was back in the 80s when Thatcher and Reagan, for some, reigned supreme, and the economy was expanding, and there were a lot of people going into business. So I've been in business, I've been an accountant, and then eventually I felt the urge to do something different. So I moved into publishing and created Practice Track, which some of you might have come across. It became the UK's largest publisher of things like budget reports, tax cards, and the like. And then one day in 1998, I woke up and thought, oh my gosh, the message out there in 1998 was that everything was going to be done on the internet. And I was building a paper-based company. So I spent a number of hours and eventually conceived the idea of Practice Web, which today is still the UK's largest provider of hosted content management websites for accountants. So that's my background. And along that journey, I have for the last 30 years been consulting with accounting firms from sole practitioners up to 50 plus partner firms here in the UK, and most of the globally branded firms around the world I have worked for at some point in time. I continue to work for 2 of them, and they've just persuaded me to visit their offices now that we are starting to see a little bit more freedom in terms of travel. So we're going to walk you through 7 different sessions. And you're going to find out that, of course, at the end of the day, I've got to the age and I have the color of hair, which suggests that I probably have the what it takes to be a consultant. But I'd like you to know this. As a consultant, I am only ever 65% correct. Please do not think that anything that I am saying or sharing is the gospel truth as far as you are concerned. What I want to do is to go on this journey with you and allow you to translate what I'm saying into your accountancy business. Some of the things I say might apply, some of them might not. But I promise you, I'm going to walk you through the nuts and the bolts of how to look differently at your accountancy business. There are going to be 5 poll questions. The first one coming up shortly will be in the chat box. So I've got to work out how to look at chat. And then there are going to be 4 more poll questions where you're going to use the normal poll process built within Zoom. And there will also be 2 7-minute breaks. So I hope that gives you an overview of the structure. And within a few minutes, either side of 12 o'clock, we will finish. So let's have a little quick look at the 7 sessions that we're going to walk through. We start off with some sort of a slow build-up, looking at the past and connecting it with the future. We're going to be looking ahead and taking a view. I'm not going to be overly focused on COVID. because I think 2 years and a month into this, we've worked out a lot. And I don't think there's any great advantage in me, not a current practitioner, going into great detail on things like working from home. I have a blog which writes endlessly on such things as working from home, and I'll tell you a little bit about that later on. We're going to look at the ongoing challenge with the evaporation of the trilogy of our compliance services. I'm going to look at my Lubrum model. We're going to look at key performance indicators, client service, and finally, the real gem of this course is the very, very unique material that I have created working alongside companies like RSM, BDO, and Grant Thornton, not in the UK, that's elsewhere in the globe. And that is called Margin Mastery. And I absolutely promise you that this will enlighten you. Let me just give you one insight. One of the things that we say in Margin Mastery is that there are some 20th century terms that we're using that should be eliminated from our vocabulary. They're reinforced, unfortunately, by your technology. And the one word that we should be banning and never, ever using again, because it is the most useless term in the accountancy office when it comes to managing job profitability, is the word write down. Yes, I know it is a word that is used everywhere, but the word write down is a word that you have to stop using. And that's the key to unlocking improving job profitability. So wait for that. I plan, because your manual is fairly comprehensive, I plan to start session 7 at no later than 11 o'clock, because I want to ensure that the back end of the course is dealt with in a comprehensive manner. So your manual, which you get at 11:40, will take you through each of these sessions. In times gone by, just to say, because of my hesitation with the internet, these bullet points normally come up one by one. But you know what? I don't want to risk the animation failing on your device that you're looking at this. So we all know that there have been changes as a consequence of the pandemic. Today, in April 2022, there is evidence that some people are absenting themselves from work and saying it's down to COVID. Now we have to pay £2 a time to test ourselves. And you'll notice that the statistics for the number of cases are down quite low compared to where they were a few weeks ago, but the number of deaths are going up. 2 weeks ago, or maybe 3 weeks ago now, I, after 2 years, finally contracted COVID. And I thought, well, what's the point in telling anybody I've got COVID, apart from those around me? I didn't report it, and I know other people that didn't report it. So we all know that there are changes with regard to staff. Some of the interesting things that happened during the pandemic is that many firms had record years in terms of profitability. And I'm not just talking about the UK, I'm talking about firms in the United States of America and in Australia. So there are consequences which are ongoing. You know, should you allow staff to work from home? And you'll have worked through these issues already. In many firms, they have seen training costs increase. And now this week, we've seen national insurance costs increase. And as salaries go up with inflation at 5.5%. And incidentally, there are 20 countries in Europe that have higher rates of inflation than we do. So there are still inflationary pressures, and we have to be cognizant of that when it comes to salary increases, when it comes to rate increases, when it comes to price increases. Make sure that you don't miss out on 2022, increasing your prices to your clients. People have over the last few decades taken more time for holidays. We have celebrations for the monarchy this year when it comes to the Queen, so we get extra days. And so increasingly, there are a reducing number of days where staff can be working. And with the challenges of the pandemic, that has certainly for many companies, not all, been a challenge. People were talking about the fact that people were, after the pandemic, going to move. They called it, I think, the Great Resignation. And there has been some evidence of that. The big four firms, for example, have been paying some seriously large amounts of signing on bonuses. And indeed, some of the large companies have been paying large bonuses, possibly out of profits that there were excess over the COVID period, to their staff as loyalty bonuses. I have worked recently with 2 to 3 partner firms, and I've been amazed at the huge cost of technology. The technology providers are taking huge slices, and they take no notice of inflation as they ratchet up their increases. Today, aided and abetted by government, we're seeing increased competition, particularly from technology companies. And the reality is that the trilogy of our compliance services are now increasingly delivered through technology. And so the technology companies who originally were our allies, and still are, of course, to a large extent, are now our competitors. There was an advertisement by Iris about 6 years ago, pretty much saying, you know, come to us because your accountants are charging by the hour and aren't great value for money. An advertisement which staggered many people. So there's an increased competition. So this loyalty of staff isn't as great. And in particular, many companies are reporting reducing job recovery. So we have new competitors, changing technology, and a problem that has been with us for decades is how to find new staff, or as somebody once told me in Cape Town, Mark, we don't use the word staff any longer, we use the word talent. So I don't mind which term you use, I still find staff more comfortable. That's probably an age thing. Some firms are seeing an eroding client base. You'll have your own take on this, but my view when it came to making tax digital was that we've already lost 10% of our clients due to 3-line reporting: gross income, costs, net profit. We're possibly likely to lose another 10%. My son, for example, who runs his own company, will do all of his own reporting and hardly use his accountant. But the remaining 80% want to run their business, and all of this stuff to do with reporting and being online always raises the question, you know, is what I'm doing correct? And so I forecast that the demand for our services will potentially triple as we get fully into making tax digital. Many firms are reporting reducing billable hours. And again, many firms are saying they don't have a robust and full new client pipeline. So right at the beginning of the session that we have together, and I'm not quite sure how this will work because I can't see my chat box, I'm asking the question, simply this: you've signed up for the course and you've switched on. And here's my question: do you believe that you can increase your firm's profitability? And if you would be happy to populate in the chat box, could you indicate maybe by percentage how much in 2022-23 you're seeing your profit increasing over and above what you generated in 21-22? And I'm going to give you a few minutes to do that. I can see 1 or 2 of you are putting answers in the chat box. Let me leave that with you while you think, and I will come back to it in a couple of minutes. So moving on, we're going to look slightly differently at changes in our marketplace. For those of you who were 60s kids like me, you'll recognize Bob Dylan, which is the reason why this page is called "The Times They Are A-Changing." So really what we all have to do, understanding that we have been and continue to be at the crossroads. My generation was able to use the trilogy of compliance services, auditing, accounting, and tax, 95% or more of our revenues came from those services. Go back into the 60s, 70s, and 80s, and every company had to have an audit. Now companies don't have to have an audit. There are a fewer companies being audited. Now people can do their own tax returns. Now people can do the accounts themselves. But the key to it is assurance. The key to it is personal service, relationship. And those are things that technology cannot deliver. So technology companies, starting in the 70s and 80s, I signed up with a company run by a gentleman called Peter Mart. I cannot remember what his company name was now, but Peter and his fellow director pretty much took a grip on delivering accountancy solutions on our computers. Now, technology companies have taken a grip, and most of us are pretty much moving from hard drive to the cloud. I got an email yesterday from somebody in Nigeria, and he said, I want to offer my services across the whole of Africa. Will your online course be of help to me? I haven't yet answered his question, but I will do. But the point is this, is that our geographic boundaries through the internet are now being breached. Competitors can come into your marketplace, not even from your own town, city, county, the country. We're seeing people coming from other countries and entering our marketplace. For example, Americans are auditing UK companies online. Now clients, the internet has made us all slightly less tolerant. You do a search, and if you don't get the right answer in like a nanosecond, you're off doing another search. So clients are wanting more for less. And it's true, isn't it, for all of us, that we all want to get more out of our software, and we're really not keen to pay any more. It's just the nature of the day that we're less tolerant, we're less patient, and we don't want to pay anymore, but we expect to get more. And software, of course, is enabling our clients to be independent. So the challenge we have is in the area of staff. Now we have accounting robots, AI and apps that are delivering answers to clients. Compliance is increasingly digitalized. We have a situation where, starting in Australia, government is in collusion with technology companies. And my evidence to support that is that if you go to Australia, which was the first country that started this movement, Xero was enabling businesses and individuals to bypass the accountant. And of course, as my dear friend Rebecca Bennyworth, who I know is one of the lecturers for Tolley's, has told me, the UK government and HMRC were looking very carefully at what was going on. And I can't remember the year, but you will remember that there was a budget on March the 10th one year where I think it was Gordon Brown, maybe it was one of his successors, stood up and said, and we're going to abolish tax returns and put them all online. And then December that year, they announced making tax digital. If I'm a bit hazy on the year, I'm not hazy on the fact that those two announcements pretty much shocked the accountancy profession. And so as we become more digitalized, compliance prices are falling. Technology companies are able to say, the first 3 months are free. Not something that we can normally see in the profession. The theory is, and it's been like this for the last 25 years, is that as we lose compliance, then what people say is that business advisory services, and I've carefully inserted the word should here, because the only companies that make a real success of business advisory, as I see it, and remember, I'm only perhaps 65% correct, is those companies that have committed full-time people into developing specialist services. In other words, the generalist partner doesn't often do much in the area of business advisory. But as I look through your websites I can see that there is an increasing service portfolio where there are much wider range of services that fit into the business advisory or value added, if you wish to use that term. And so now real-time accounting, real-time reporting, real-time analysis is where we have to be, because if we don't move into the real time, we're either going to be not succeeding or potentially even redundant. And I've got a number of points to make about that, but I tell you what, I'll wait until they come up. So I have this question to ask, but before I do that, allow me just to go back, and my thanks to those of you, and I just need to get my glasses, one moment, I'll be with you. I have all my technology equipment fired up. Andrew, seeing a reduction. Graham, welcome to this session, 100% increase, 8%, yep, I can relate to that, 5%. The average number for Q1 was, so there's such a variety. And if there's one thing I know about the profession, is there are a variety of performance factors. So here's my first question. And I've asked this at seminars, wherever I've lectured. Tell me, what's the purpose of a business? And I'm so used to seeing accountants sitting there thinking, this is a trick question. It's such an obvious question with an answer that I don't think I'm going to put my head above the parapet. And so accountants, eventually somebody ventures the response that the purpose of the business is to make money. And it's at this point where I say, I'm only ever 65% correct, but equally, you have the right to be wrong, because the purpose of a business is not to make a profit. The purpose of a business is to meet the needs of its clients and its customers. As a result of meeting those needs, there will be a number of outcomes. One of those outcomes is making a profit. So profit is how we keep score. Let me also ask this, and this is really pertinent to those of you that have committed the 3 hours to listen to me this morning. And my question simply is this: who is your best client? And the answer very simply is this: it has to be your firm. You are spending time working on your firm. Okay, I know that some of you might have answered about half a dozen emails and given a few nods to people who've passed by you. But the reality is this: if we do not look after our firm, if we don't invest, if we don't make sure that we're managing well, then maybe we're not as able to look after our other clients as perhaps we could be. A few basics on communication. I am currently speaking at the rate of 160 words a minute. Your brain processes words at the rate of 600 words a minute. So all the time I've been speaking, you might have been thinking about stuff that you have to do this afternoon. You might have been responding to staff. You might have been thinking, how do I feel about what this guy is saying? So we have greater capacity. And incidentally, that's important, because whenever you're talking to staff, whenever you're engaging with your partners and your clients, remember that we have to do all we can to make sure that we occupy their mind. So, being energetic at 5 o'clock this afternoon on a Friday, being enthusiastic, and I'm not suggesting you do as I'm doing, although I don't think you can see that, but I am waving my hands around and I am seeing that. But we have to keep up a high level of energy. We have to make sure that we are engaging with people so that they follow what we're saying. Having said that, do you know that when you first meet somebody, Professor Mahabarin, about 30 years ago, produced a scientific paper, and in that paper suggested that as little as 7% of what is said at a first meeting is remembered, and yet 8%, in other words, more then what was remembered was never said. So we need to do all we can to communicate clearly and make sure that people understand and follow what it is we're saying. I'm just going to give you a caveat, which I hope might help you process the material that we're going to be listening to today. We, all of us, have limited change capacity or change energy, as you see on the screen, to make change. The reality is that an individual or an organization, based upon research, can only effectively implement between 5 to 8 changes in a 12-month period. And 5 is a more realistic number than 8. And so what I'd like to say this morning is that look for the things that you could do differently, rather than trying to broadcast across the whole of the office some sort of change that you think has arisen from listening to me this morning. So let's all look personally at what this message is, implement those things that we think are important, and then try and influence the other people around us in the organization. One of the craziest management maxims, and you still hear it today, and people say this: we've got to go and think outside the box. And it is the craziest management maxim you have ever heard. The reason for that is simply this: if I am thinking outside the box, where am I? Surely, if I've got to think outside the box, I'm inside it. Hey, hold on. We, in this ever-changing world, have to live outside the box, where technology is advancing on a daily basis, where services are changing, where clients face the challenges still of the economy. And in fact, better still, why don't we just throw this box away and just get on with managing life, business, clients, staff, profitability, and what have you. So this is the first poll, and the team at Quantuma, who, can I tell you, have been absolutely brilliant. This is the first time I've done a poll with Quantuma and even with Zoom. So I have a question for you. And the question simply is this: how do you see profitability for the rest of this year? And the options that you've got, which I think are fairly comprehensive, and you should be able to slot into one of them, is, do you see profit going? I mean, we're accountants, so surely we should know the answers to some of these questions. Do you see profitability? And you see your 4 options: down 10, same as last year, up by 10, up by more than 10. And so please do populate the poll. And I'm guessing that our Quantuma team will lead me through. And I think the poll has gone. Oh, right. Amazing. Okay, I think you can all see the answer on the screen. A quarter of you are seeing downward profitability. Let's work on that today. 18%, same as last year, ditto. And half of you are seeing profits increase by up to 10% or more. Excellent, brilliant. Team Quantuma, I'm glad we got through that. I now see how this all works. Okay, so those of you that are seeing profitability reduce, please listen in. Those of you that are seeing profitability by up to 10%, please, inflation is 6% or thereabouts. So really that's only a 4% increase. Those of you who are going for more than 10%, I hope you can get 2 or 3 pointers to make sure that that happens, but also maybe because you're already in the mode of good profitability increase, there might be the opportunity to even improve on that. Very briefly, I don't know if any of you know Graham Lamont. I've known Graham for 25 years. I'm going to leave you to read the screen because I'm not a great believer in reading screens. But Graham and I first met 25, 30 years ago. I think he's now on the Institute of Chartered Accountants Council. He is, I think, a 3 or 4 partner firm up in the northwest of England. And he started sharing with me years ago how he started to himself drive forward the delivery of what he calls his FD service. And if you just look at what he's reporting, here's what I want to say to you. Surely, if Graham can service 200 clients in the way that you can read on this screen while I'm talking, you could potentially find 5 or 10 clients in 2022 where you could deliver the regularly recurring advisory meeting. Now, one of the things I will say to you is that it is massively important, bearing in mind the evaporation in some areas of our compliance revenues, notwithstanding the surge that we saw during COVID. We need to make sure that we are refreshing the intellect between our 2 ears, refreshing our ability so that we can give clients that we've known for years fresh insight, fresh advice, fresh encouragement. Make sure you invest not just in keeping the engine of your brain that is devoted to compliance, but make sure that you spread beyond compliance. Many years ago, I started with my own accountancy business, giving business advice to clients. And we used to meet with 9 to 10 clients 3 or 4 times a year. That was where my passion for business advisory started. So we have 7 sessions this morning, and you might think we're going fairly quickly. Some of the later sessions take a little bit of time. What I'm trying to do is to establish in these first 4 sessions some foundations. So I want to introduce you to what we call the Lubrum model. You see, in our accountancy businesses, we engage in 4 specific management activities, and you can see them on the screen. Productivity, doing the job, how we price for the job, managing our staff, managing our costs, and managing our clients. Those 4 management activities give rise to what we call the 5 keys to firm profitability. And you can see where Lubrum comes from by taking the first letter. Rather than explain, let me give you an example. This firm has 64 people and 8 partners. The leverage, if you're American, or leverage, if you are English, is calculated by dividing the number of people by the number of firm owners, hence 8. If you have a lot of audit work, typically that will be 12 or more. The leverage in accountancy businesses has been falling as some of the core compliance work over the last 20 years has been diminishing. So that's the L. Those 64 people give rise to 65,000 chargeable hours. So our utilization, and you can see the bold figures, I hope, on your screen. Utilization is calculated by dividing the number of people into the number of chargeable hours. Those 65,000 hours give rise to 8 million in revenues. That is 8 million at chargeable time, not at billed rate. So our standard fees, that is taking all of our hours at standard rate. So we can now calculate the average billing rate per hour. Incidentally, no, I'll come on to that in a minute. So now we have our top line, net fees of 7 million, which means we're realizing 85%. A well-managed accountancy business will normally realize 85% of standard fees, not 100%, not 95%, but a well-managed business will realize 85%. If you're realizing more than 85%, you need to put your charge rates up. Now, some might resist that in the firm. I don't know why. All I'm asking you to do is change a number on the computer and take the charge rate up from 125 to 135. I'm not at this stage asking you to increase the price to clients. What I'm trying to do is to make sure that we don't let the opportunity for revenue to fall through the cracks. And if you are realizing less than 85%, you need to increase the price to clients, bearing in mind that the first 6% is not a price increase. So we have net fees of 7 million. And you'll see, interestingly, a number now that I suspect you do not know in your accountancy business. And yet I'm going to suggest to you it's one of the most important KPIs. Here's how we calculate it. We take the actual net fees, 6.9, and we divide it by the total chargeable hours. And you can see the relationship between 6.9 million and 65,000. So our net billing rate, certifiable in a court of law, is 106. You see, the thing is, your billing rate is not necessarily a real figure. It's just your aspiration with regard to what it is you think can be charged to the client. Here's what I want you to do. Look at what your net billing rate, your revenue per billable hour was 2 years ago, 1 year ago, this year, and importantly, what your forecast is for 22-23. We need to take this KPI and nudge it up, and you might find that your revenue per billable hour has been falling. And in fact, generally in our profession, the pressure on the top line has for many years been downwards, whilst the pressure on our costs have been increasing. So we have a squeezed margin. So that's realization. Our net profit is 2, which means we're operating on a margin of 30%, which some firms still are. Some firms are higher than 30%, but the margin is under pressure. And for most firms, the likelihood is that 80% or more of firms are seeing squeezed, reduced margins. And then we can calculate our NIP, which is our net income per partner. Let's just strip away those numbers and look at our model. And the model very simply is this, is that multiply those to 5 numbers together and you'll end up with the net income per partner. So now let's play with the model. If, and I stress the word if I can get you to increase your utilization by, let's say, 50 hours per partner, 50 hours per manager, we are going to see, provided we can bill and collect, an increase in our net profit of 16%. If we were to increase our billing rate by just 1, provided we can bill and collect, we're going to see an increase of 3%. In other words, those 2 minor changes amount to about 19%. Let's just have a look at the way the profession has changed. I've taken figures from one firm for 2000 and again looked at 2022-23, the current year. What we're looking at, if we go back 22 years ago, is that typically the profession had a model which was 1/3, 1/3, 1/3. You might read about it in the history books. 1 or 2 firms are still delivering on it, but it is not that for most firms. We have a situation where, as there's been pressure on price, as there's been pressure on wage costs, no longer are we doing 1/3 profit, 1/3 costs, and 1/3 salaries. We're now seeing a situation where almost all firms have breached the 50% barrier, whereby we're seeing 50% of our revenue being taken in notional partner and staff salaries. And that pressure continues. And the purpose of this course and the 3 hours that we have together is to say, this cannot continue. And let me just say, you cannot bill less than 6% more this year for last year, because otherwise you're billing less. So the old lockstep model of 1/3, 1/3, 1/3 is history generally. And now what we have to do is to monitor our margins, which is why I want you to consider monitoring monthly your revenue per billable hour. You manage what you monitor. I went to go and see my nurse practitioner 2 weeks ago. She gave me the message, Mark, you've got to lose weight. So guess what? I'm now every morning looking to make sure I haven't increased my weight. And gradually this week, I think I've managed to lose 3 pounds so far. So I'm trying to get down to my target. But the point is this, I am managing my food intake because my KPI is on the scales. Are you with me? You manage what you monitor. I'd like to introduce you to what I call the Tuba model. I was not responsible for the Lubrum model. It was that esteemed consultant, David Maister. But I took David's model and I created what I call my Tuba model. And what I'd like you to do is just look across the top. You'll see total hours, and all those 4 have got the same total hours. And I don't think any of these figures are unrealistic. So take column 2 and 3. In column 2, we have a partner charging 840 hours. I have partners in firms who are clients of mine in London, where some of the partners who don't have any massive responsibilities in firm administration or management are doing less than 500 hours. I've also got partners doing 1,100, 1,200 hours. And in 1 or 2 firms, I've got partners in the 1,400. So these are real numbers. Billing rates, I'm sure you will know that there is a wide variation in the profession. And 75% realization compared to 85%, isn't that great? But just look at what partner 2 generates compared to partner 3. And go back and look, and you'll see that partner 3 is making sure that they're charging time to clients. Your accountancy business is not, so far as I'm aware, registered as a charity. Would that be correct? We're not registered as charities. We are for-profit businesses. But sometimes we donate times to clients. It goes a bit like this, and you're thinking, oh, I can't possibly charge that time to the client. Here's what I want to say to you, and forgive my language, but I don't want you to screw with what I call your retail costing system. Your billing system, your time recording system is nothing other than a retail costing system. You need to know what the retail cost is of delivering your services to your clients. It is massively important that you capture all your time. You need to know what the time is. Maybe you could talk to the client in the future about a higher price. Maybe you could talk to the client about doing them doing additional work. Maybe you could look internally at what work you're doing that perhaps is not necessary. I have one client with 28 partners, and I was meeting with some of their managers, and they told me how standards of expectations of audit work varies from one partner to another in the same office. So what I want to say to you is this, is that your time on is massively important. You and I weren't trained as administrators. Hire people to do that stuff. I didn't even produce my own firm's accounts. When I was a 2-partner firm, I took one of my management staff and I said to them, look after doing my own accounts. So your time on is massively important. Capture all of your time. Remember the impact that those 50 hours had, and don't make the assumption that you can bill it. And please don't misrepresent the inputs that you give to clients. You see, in total, we have somewhere in the region of 2,000 hours. If you take 52 weeks at 40 hours a week, it's 2,080. And yet some of us are charging less than 1,200. And my benchmark is normally in the region of 1,150 to 1,200 hours. If you're doing more than that, Keep on going. If you're doing less than that, remember, we're here to look after our clients. Your clients love you. They normally cannot get too much of you. When it comes to realization, I've said to you, if you're doing less than 85%, focus this year on doing more. I have 2 clients where I am working through with them every single job. One of the clients is in Johannesburg. One of the clients is in the north of England. And we're dealing with jobs where I had a meeting last night online. The realization was on one job was 24%. And I said, you're not even covering time. What's happening? Well, we used to do the VAT quarterly, but now we're working with the client every week. And I said, here's what you need to do. You need to tell that client that the price has to increase because you're interfacing with the client 13 times a quarter. And furthermore, when you are doing this work weekly, you need to quote per week, because quoting per week at 25, 30 pounds is nowhere near as great a sum when you're hearing it as maybe 600 or 700 pounds a quarter. So we are seeing changes in the profession. What we did yesterday won't work tomorrow. So we have to have fresh ideas, fresh input, and fresh impetus. So client 3 is making a massive contribution. You, as partners, your contribution to your bottom line, to your take-home pay, to your profit, to your ability to reduce debt, if that exists, will be enhanced by your input into the company, capturing the time and delegating any of the dross to other people. You might be charging 125 to 250 an hour. That is not the administrator's rate of pay. You need to pay people to do the job that they're qualified for, because you and I aren't qualified. Let me tell you this, when I was managing my accountancy business, I created 2 pages of all the admin junk that I was responsible for doing. I went to one of my typists and I said to her, I'd like you to be, there were 14 in the company, that was all. I said to Doreen, I said, you need to do half-time typing and half-time firm administration. After 6 weeks, she came to me and she said, Mark, listen to me. Firm administration is a full-time job. I can't remember. I was probably paying her £14,000. I looked at my charge out rate. I don't know, was it £100 an hour? Something like that. Are you with me? I just needed to do 100 hours chargeable to cover the whole of her salary. But above all, I was getting rid of work I didn't enjoy. Fall out of love with the admin work you do if you can get somebody else to do it, and power up your passion, your love, and your desire to charge clients and to spend more time with them. Okay, so there are 3 areas in Lubrum where you could make changes from Monday morning. First things first, set yourself a chargeable hours target for the year. So starting on 1st of April, set a target to the 31st of March and then divide it by 12, because annual targets don't motivate. By and large, annual targets don't work. What I want you to do is to create a monthly target that takes into account holidays and Christmas, and set yourself 12 targets. Do you know what? You may not succeed in every single month achieving your target. Move on to the next month. Next thing, make sure you capture time daily. I cannot think of anything worse on a Friday evening, going home, not having captured time. And yet there are many people I come across where capturing their time is something that they do periodically. You can only remember on the day what you've done if you've captured your time. No one loves writing up time records. Just do it. The other thing is that most of us go to the coffee machine, most of us go to the restroom. An hour is not 60 minutes. The consultant's hour, whose appointments are 9 o'clock, 10 o'clock, 11 o'clock, is normally 50 minutes. So don't write off that 1 hour because it's easy to go from 7.5 to 6.5. You must make sure that you capture the time and work on the basis of 50 minutes. And again, I worked with one company, 22 partners, 26 managers. I can't tell you the whole story because I haven't got the time. But can I tell you, this firm was mandating to managers that they must recover 85%. Totally true story. I was horrified as I listened. I have all the managers sat in a U shape, and Stephanie was the first to go. And she said, I take work home every night and I work all weekend and I don't charge any of my time. And I think this was around about the time of the Me Too movement. So we went all the way around the room and every single manager said the same. I went to the managing partner and said, do you know what's happening with your manager group? And he said, they must capture their time. I said, until you remove the boundary of 85%, I don't think anything will change. So be careful not to put too much pressure on your staff. Incidentally, one of the reasons they brought me in was because they had high staff turnover. No surprise. If you've ever read my book, Clients for Life, you'll know that I talk about structured client meeting plans. We'll talk about that. Track your time. And again, we're going to be talking about job profitability, but in Ignite, there are two of my modules that talk about improving staff productivity and job profitability. So realization, we need to bill our clients while the tears of appreciation are moist on their cheeks. Typically, there are very few interfirm comparisons. I have worked, because they're friends of mine, for 30 years with Mike and Kelly Platt in Indianapolis, and they run a company called Inside Public Accounting, and they produce benchmarking reports for accounting associations, state societies, and so on. And in particular, they have a top 100 survey and a top 300. They're massively into this. Here's the top 100 firms in the United States of America. They have, across the 100 firms, work in progress of 5% of gross fees. 5%. If they can do it, you can do it. We need to bill while the tears of appreciation are moist. You might send interim bills. Be very careful about the trend to send a bill of maybe 30 or 40% before the job starts without insisting that that bill is paid. Some firms are sending out an upfront invoice, some firms are sending out an interim invoice, and you get to the end of the job and it's sat there in the 60 or 90-day column. We have to insist as good business advisors that we manage our own businesses well. And so look in your 90-day column and make sure that you are collecting those interim bills. If a client is sat in the 60 or 90-day column, they are, in my opinion, abusing you. And abusing you as a professional advisor is just not going to happen. Typically, the reason why clients don't pay is because there was some aspect of the work that they weren't happy with, or alternatively, they don't have the cash flow. In the second case, that's for you to get alongside your clients and help them. Oh, the third reason is because they decide to prefer other creditors to you. Incidentally, they pay their mobile phone bills every month, don't they? Why should we allow clients to prefer other creditors and not pay us just because we know of their financial challenges? No, it's not acceptable. Attitude, attitude, attitude. They will pay. I'm going to second guess that maybe more than 90% of your work actually isn't done by the billable hour. It's what we call the fixed fee. And here we need to be careful because, incidentally, the fixed fee, this fee is this year plus 6%. So that's effectively the fixed fee. There is a fixed benchmark which you've been working to in just charging clients last year plus inflation. Here's the challenge with the fixed fee. When you bill by the hour, the client takes the risk for the price. When you reverse and charge by a fixed fee, the risk is reversed. And you are now taking the risk. And we have to do all we can to manage that risk. My son trained with BDO 8 years ago. And he said to me, Dad, he said, it's still happening today. You know, I'm sent out on a job on Monday, 2 weeks later, I finish the job. And the next week I start on another job. No time to clear review points. Allow people time and don't necessarily schedule people out on audit wall to wall. What I want you to do is take a spreadsheet. Column one is the client. Column 2 is the recovery rate for that client. So you've got X hundred clients and their recovery rate. Then do a search, lowest to highest. And I want you to look at those top 10 or 20 under recoveries. And in column 3, you need to put the amount by value of time that you think you could save on that job next year. In the next column, I want you to write the increase in price that you're going to be bold enough to ask the client to pay. And in the final column, we'll have a forecast for the next time you do the job for the recovery rate. Get as close as you can to 85% or more. Let your staff do the billing. Always exceed clients' expectations. This year, with inflation at 6%, you need to increase your rates, maybe twice during the year, 5% each time. Do you have more than one rate? I ask this question, and typically half in the room will have one rate, half will have more than one. Some of your work is what I call plain vanilla. It could be the tax return, it could be the accounts, it could be the audit, whatever. But some of the time that you spend is what I call chocolate chip time. It has greater appeal. It has greater value. It's not about the past, it's about the future. And what I want you to do is to stretch and maybe have a second rate that is perhaps 20% more than your lower first rate, and then target 100 hours of that higher rate work. We all of us want to do more interesting work. We all of us surely want to have more engaging conversations with clients. Number 3, have you got clients on that list that don't respect your staff? They're aggravating, they don't pay. And sometimes we need to move those clients on. When a client says to you, that's expensive, note, that's not a complaint. We need to stand firm and not just issue credit notes because the clients complain. Nobody wants to pay more. Here's how our core service looks to the client. We send them a set of accounts. Well, they already know roughly what the answer is to within 10%. And in the letter, we tell them how much tax they've got to pay. Nobody wants to willingly pay tax or be confronted with the quantum of the tax bill. And then we send them a time bomb, also known as the invoice. Are you with me? It's not the sexiest of service. And so clients don't always love paying our fees. They love us, but not our fees, because they kind of feel that we've just been talking about the past that had a modicum of pain because it's connected with the tax bill. Do you take every client on? Some firms take clients on just because they can fog a glass or pay the bill. We need to know that some of the clients we have, we shouldn't have. So take a spreadsheet. Take column A, all your clients. Column B, the fee, the price that you charged in 21, 22. Then do a search. Lowest at the top, highest at the bottom. Go to the top, go to line 10, and you approximately have your firm's minimum fee. Client selection policy has got many facets to it. One of them could be the minimum fee. The truth is that if you look at the principles of activity-based costing, you are, whatever the recovery is, losing money on those clients. and always take the opportunity to delegate to staff. But Mark, they can't do this. Train them. They are your future owners. I'm working with a client at the moment, 8-partner firm. And I said to them, I've listened to all the stories. I've got 4 partners disappearing. And I've got 1 partner who isn't sure whether he wants to be a partner. Very successful firm. I said, you have a huge issue with succession. And yet you're telling me that your 15 managers, none of them are good for partner. I said, I can't accept that, because if I do, it means that you have a problem which you can only solve externally. So here we go. We had the last poll, which you very kindly answered. I'd like you to go to the second poll, because I've talked about the massive importance of partner time on. This is something that really interests me. And I could ask a different question, like by how much will you increase it? But that's very assumptive. I just want to know the reality. Is partner time reducing, same as last year? Or let's just imagine, can we now increase by 50 or even by more than 50? If you would kindly fill in that poll, and I'll come back to it, or I think your host team at Quantuma will post up the replies. Wonderful. Glasses on. Okay, so almost a fifth are reducing, 48%, same as last year. I'd love to know what that number is. I could ask a supplementary question. If any of you want to post anything in chat, please do. I'm suggesting that a partner, other than a managing partner, should be doing 1,150 hours a year or more. I am aware. Oh, just let me tell you this story. I started working with Mike and Kelly 30 years ago. And 30 years ago in America, the average time on for a partner in a CPA firm was 1,200 hours. Interestingly, in the UK, benchmark services by ICAS and ICAW also indicated that the average partner time on was 1,200. Today in the USA, Mike and Kelly are seeing their benchmarking reports coming in at 1,150 chargeable hours. Whereas in the UK, with sparse information, because there aren't so many benchmarks, the average partner is doing between 800 and 900 hours. That is literally 25% less than it was 25, 30 years ago. We need to focus on our clients. Okay, and 13% are going to do more than 50 hours. Those of you that are in categories 1, 2, and 3, aspire to those respondents who've said that they're going to do more than 50 hours. It's easy to start with. Just charge all of your time. Start to look at the things you're doing that you could delegate. Well, I think you have listened to me for 50 minutes. So I created this slide last night, and my wife said to me, she said, do you think you should have the one with the lady smoking? And I said, absolutely, because some people do smoke still. So I've put there a message that you can ask questions in the chat box. Team Quantuma, I can't remember if that will work, but I think possibly keep on putting your questions in and we will get to them at the end. I have here a timer and 7 minutes. We'll all meet back and we'll carry on. Thank you so far. Okay, welcome back. Just a couple of points from our first session. First of all, a story, but no, before I start, let's just go back to what I said about increasing your charge rate. Remember I said to you that I'm really not asking you to increase your invoices at this stage. I'm just asking you to increase the charge rate. Let's just assume you meet with some resistance. Let's take a simple number, and the number is 12. So you want to increase your charge out rates for partners and maybe managers by £12 an hour. So here's what I'd like you to do. I'd like you, if you won't increase it in one go, if you won't increase it in 2 installments, then I'd like you to increase it by £1 a month, every month, for 12 months. Now, I don't know if you can hear a little tingling noise. It's not this end, but I hope it doesn't interfere too much. Let me just tell you a story. About 8 years ago, a husband and wife team came to me, 2-partner firm, and they outlined their situation and said that they thought they needed to sell their accountancy business. And I said, you cannot sell your accountancy business. You're not even making enough profit for one partner, let alone 2 partners. And they accepted that. And I said, the alternative to selling your accountancy business is working with me to increase your profits so that we're fit to sell. But I said, the marketplace is changing, and it could be that when you're ready to sell, there might not be a market for accountancy businesses. Now, I know you can say today that that's preposterous, but you know, with falling compliance revenues, there was just a possibility. And I said, what we need to do is we need to make as much money as we can now, so that even if you don't get a sale, you're going to be able to live comfortably in retirement. So I worked with them every year for 6 or 7 years. I held staff retreats. And here's the end of the story. 2 years ago, they banked over £1 million when they sold out to Baldwin's. That's the outline of the story. But what I want to say to you is that proactively and entrepreneurially adapting your business today for tomorrow, focusing on your best client and using good management techniques and being bold and confident in what you are delivering to clients is really important. The other thing, let me just say this, in spite of everything I've said, I'm going to tell you that you are not selling hours. And I'll tell you why you're not selling hours. Because no client ever comes to you and says, I want to buy 8 hours. What we are selling is different from hours. And we're going to look at that in session 6. So in session 5, and we've got 2 more to go, and 1 3/4 hours. I'm just going to look at the chat box to see whether Team Quantuma have said anything. I just hear a slight jingling, but don't know what that is. Maybe it's, oh, hold on. I'm just going to stop my screen. I'll share it in a minute, just in case. I have a little, okay, I'll tell you what, I'll have a look at it when we have the next break. Oh, incidentally, your manual, Power Up Your Profitability, is here. You'll be getting this in about 1.25 hours time. And it takes you through in times gone by. Okay, so I will be with you in a minute. My apologies for this slight change. Here we go. Right. So I've got 5 KPIs. First things first, you can, this applies to your clients, okay? You can manage any business by managing 5 KPIs. You can manage any business by managing 5 KPIs. Golden rule, not one of those KPIs will be a number in the P&L or balance sheet. The reason for that is those numbers are boring. What we need to do is we need to find drivers that will increase the numbers in the P&L and balance sheet the way you want them to. So for example, in my accountancy business, here are the 5 numbers that I used to manage, and they're different from the ones that are on your screen. In my accountancy business, this is what I managed together with my partners. We managed every month the number of chargeable hours to clients. We managed the total number of hours. So I was looking for partners to deliver 100 hours a month to clients. We managed total hours. I was looking for 200 hours a month. So that's 100 on clients and 100 on other stuff, whether it's marketing, admin, or whatever. The third thing I managed was I managed every single month, and you'll get why I did this in session 6, the next session. I managed the number of meetings I held with clients. So it was what I call my client meeting count. And then the next thing I managed was my referral count. In other words, the number of referrals, people who were introducing business to us, because we put great emphasis on meeting face-to-face, eyeball to eyeball, kneecap to kneecap with clients. We put great emphasis on networking to make sure that the people who were sending clients to us knew us, because every time a referral makes a recommendation, they're taking a risk. We have to do all we can to minimize the perceived risk by getting to know these people, sharing with them, taking them out, having a meal with them, or whatever it is that makes you connect with that individual. So that was time on, total time, meetings with clients, meetings with referrals. And the last one was the percentage of lockup, that is debtors including VAT, and work in progress at realized value. We used to try and keep our lockup down to 20% of gross income. So now, having given you those 5, let me give you the 5 which I want to talk about. And the first one we've already discussed, and that is, I think it's massively important that we monitor the revenue per billable hour. I have no interest whatsoever in your overheads. I am massively interested in your margin. And it starts by looking at the billable hour. So that's my number 1. Number 2, again, a number that we should be nudging up. We want to try and focus on the additional revenues that we can gain by each client. So for example, we could determine what a good client looks like for your firm. And if you go back over the decades, you'll know that the big 8, when originally there were 8, used to offload clients because their fees weren't high enough. And the reality is that if your accountancy business has been going for a number of years, you have probably gathered some clients that perhaps could be better served elsewhere as you seek better quality clients. One of the monitors of that financially is to try and nudge up the revenue per client. I have a client in this country that's trying to nudge up to £1,500 per client. What I would suggest you do is just take your spreadsheet and your revenue per client and just look at the bottom 15 or 20 again, and then look at the top 10 and try and come up with a realistic number that you're trying to get more of those clients over the revenue per client benchmark. So again, you know, these are supposed to be interesting KPIs. Eventually they will feed through to the P&L. The other thing that's hugely important, because this is a cost center that has increased exponentially over the last 20 years. National insurance has gone up. It's relentless. Staff want more holiday. Staff want higher pay. You know, a 6% pay rise plus national insurance plus pension equals 10%. And you'll say, Mark, you haven't got the numbers right. You would mean, I'd rather round up than round down. So I think we should keep a very careful monitor on our revenue and compare the staff costs to it. So those are three. Here are 6 others. You can take your pick. Time on, recovery rates. What are your non-compliance revenues? What new business are you winning? You know, give everybody a target. If they won 3 clients last year, equaling £10,000 worth of revenue, first of all, I need them to keep doing 10,000, but maybe they could set a target for themselves. Be very careful about giving people targets. Ownership of targets has to be massively important. Don't demand that somebody does 1,200 hours if they're currently doing 800. Ask them this question. You're currently doing 800. How many additional hours can you see yourself doing in the next 12 months? Motivate people, encourage people, hold them accountable. There's a term on the screen, cross-serving. You might call that cross-selling. Here's the problem with cross-selling. Some of your partners might react. They might say to you, we didn't come into this profession to sell. So let's just get over that hurdle. We're all about serving. Okay, so you don't want to sell? How about serving your clients? Everybody has to put their hands up to say, yes, I want to serve my clients. You could, if you want, monitor non-chargeable. I mean, things like sickness, things like holiday. You have to look at the time that is being invested in such things as marketing, administration, staff, and just see if it's being invested well. And ask the question, could somebody else do that? So those are just a few KPIs. The key to the KPIs is this. First of all, you manage what you monitor. Secondly, I have no enthusiasm for monthly or quarterly partners meetings when they look at the profit and loss account and balance sheet. Those things should reflect the dynamics of your day-to-day management of the business. I want you to be excited by running this business. You're serving the community. You deserve to make a healthy profit because of the investment that you have made in your own development, because of the journey that you have been on. And it's important that we recognize that we're all worthy of being hired and well remunerated. So those are a few KPIs. It is the beginning of session 6. And for those of you that are watching this online, it is now 25 past 10, get my timing right. And we only have 2 sessions to go. And you might think, is this going to be wrapped up in the next half hour? Oh, no. We've got some good things. So here we go. So what I said to you earlier on is that we are not selling hours because clients don't buy hours. So what is it we're selling? Are we selling time? No. Are we selling expertise? Maybe, yeah. Are we selling wisdom? Yes. But above all, as accountants, if your client has a problem, you are underservicing that client if you don't provide or signpost them to somebody else who can provide a solution to the problem. I created this model, oh gosh, about 30 years ago. I know that because I used to have it on acetate. So it's a model I fell in love with at the beginning of my consulting and lecturing career, and it's been with me ever since. And it is simply this, is that as the captain of the Titanic once found, 10 to 15% of the iceberg is above the surface and the rest is below. Your face-to-face, eyeball-to-eyeball time with the client is normally in the region of 10 to 15%. And most of the work that you deliver to clients is not visible. In other words, it tends to be compliance. But just look at the value model, because I'm going to suggest to you that 80% of the value that the client receives is when you are with them face-to-face, eyeball-to-eyeball. Sure, your team are delivering value. These are services that are historical in nature. and the client needs them, doesn't necessarily want them, because they possibly have up-to-date information and all we're doing is confirming. So what I want to say to you as partners is, how could you invest? And I use the word invest because when we're with a client, I expect the client to be able to derive value. You are not giving me these 3 hours this morning without expecting a return. I know that. The team at Quantuma know that. And it's my job to try and probe, encourage, cajole, and help point the way so that you have a higher understanding of your value and what is of value to the clients. So understand that we should be prepared to invest more time. I would rather you invest time with clients than time on administration. Surely we should live our lives in accordance with our highest priority. What is your highest priority? What do you, over the next 8 months of this year, need to move on from? What do you need to delegate to others? Your dross work is exciting and high quality work to other people. They might not be called firm owners, but they could be called part of your team. So recognize the value of you and your time. You see, we're called accountants. Somebody also once said you could also call yourself an historian, because 95% of our hours, unless we have specialists in the company, are historical in the nature, looking at last year's accounts, last year's audit, last year's tax return. So, and remember the 65% rule. I need you not to disagree with me, but to apply the numbers and the principles yourself to your own business. So as little as 5% of our time is spent on the present and the future. And that might be at a compliance meeting saying, how's the business? Are you with me? Just general chit chat. How often on your invoices do you have a specific sum certain for services that you have delivered to the client that are not compliance driven? In fact, take a spreadsheet. Column A, client. Column B, fees. Column C, additional services which we have invoiced. In other words, not the compliance fee. Well, at the bottom of the invoice, it said sundry advice from time to time. I need a sum certain in that third column, but it doesn't end there. Because now what I want you to do is to take the number in that third column and analyze it. And I want you to analyze it between services that the client has bought, and then the next column is services that you have sold. Let me explain. Services that the client has bought, that is where their situation demands that they come to you and say, I need you to do this for me. Services sold are where you have introduced a service solution and the client has said, I want that. That last column is the one that you need to focus on growing. What is your portfolio of services? What does your website say about your portfolio of services? Does it focus on the benefit and value to the client rather than focusing on blowing your own trumpet? You know, and there are all sorts of wordings that you can look at, but and now isn't the time for me to go into that, as tempted as I am. You see, from the client's point of view, 95% of your client's life is focused on the present and the future. I mean, the only time that your clients look at the past is when there's a bad debt, a customer service problem, or the accountant comes calling. The more you can camp in the client's reality of today's business and the future business, the greater value you will have. Making succinct, making insightful comments on past documents is fine. And I'm sure you are good at it. What I want you to do is to step over the line of yesterday and step into tomorrow. Because in this noisy, busy COVID world, your clients need help, reassurance, somebody that they can talk to, somebody they can trust. You are first in line for delivering that comfort, that reassurance, that challenge, that insight, and pointing the way forward. So just think for a moment, what services have you offered to clients and delivered in the last year? I mean, look at that final column of services that you have been asked for. In other words, where services have been bought and services that you've sold. That is the starting point for identifying 5 additional services. Oh, hold on. Then you could take your top 20 clients in column A, lines 1 to 20, and then across the top, you could put service A, B, C, D, E, 5 services. Then go through that service grid, because you now have 100 cells, and you could cross when any client will not have a need for that service. You could tick for any box where the client has had the service. I guarantee this, 65% of those cells, those boxes, will be unpopulated. And over the next 3 years, look for the opportunity, not to sell, but to introduce. In fact, you could go back into that cell and you could put the word I. In other words, you've introduced, you've dropped an idea into the client's mind. You see, because often if we're trying to sell, it may well be that unless we've done our diagnosis, which is asking questions, asking good questions, it may well be that that service isn't what the client wants right now. Questions are the key to identifying where your client is hurting. What is your greatest challenge? You know, what are your competitors doing that you need to seriously consider? So the rear view mirror is a reflection asking you to look at what you could do differently. I did this as a result of my commitment to meeting with my clients. And it's a question, how long do you spend with clients? And here's my grid. And I think it's in your manual. Identify, how long do you spend with the average client? Well, let me tell you this. I used to do some empirical research on my seminars. And then one day I was working for the South African Institute, and the lady at the South African Institute said, I would like to do a formal survey. Because what I used to say was that typically we're only spending about an hour face-to-face, eyeball to eyeball, kneecap to kneecap with clients. And that hour is probably 80% compliance driven. And the other 20% is sundry advice from time to time. So this is the result of about 600 people for the South African Institute of Chartered Accountants. 63% said they spend 30 to 90 minutes with clients. And all I can say is that we need to spend time with our clients, because with your good clients, there are other firms of accountants who are romancing them and trying to interest them in their services. So let's just go through a few basic. This picture's a few years old, not many, but I went into Oasis, one of the national UK chains. And what happens when you have finished your dental treatment? You know, you might have got your hand on your face, but sure enough, there is a receptionist there. And that receptionist is doing 2 things. First of all, the receptionist is there, as you can see from the machine on the right, to take money from you. So the dentist's lockup isn't measured in days or months. The dentist reception is is monitored in minutes. So she is there to take the payment. So contrast the 2 professionals, the dentist with the accountant. You know, this is about attitude. I want you to change the way in which people pay you. And there's a reason for that coming up shortly, an incredibly powerful reason. It also will enable you to improve profitability. But here's the second reason. The dentist receptionist is there to say, Mark, can I make your next appointment? So if I go into my dental record and I have taken the letter from the dentist, and so that I don't have to keep updating this, this is actually the letter that I got, except it was dated probably 2018. So you can see in Duncan and Carly's calendar, they now have in total 1, 2, 3, 4, 5, 10 meetings. And here's my question. If you go forward to June, how many appointments have you got in your calendar? Here's the point. The dentist uses this meeting as a reason for setting up the next meeting. In other words, the dentist is proactive and entrepreneurial, just like we could be as well. You've taken on a new client, make the next appointment, maybe 3 months after the first meeting, to say, how's the business going? How's the marketing going? How's the cash flow? How's the website? How's the supply chain? There's just loads of, can we look at your books and records to see how you're getting on? Do you need to have an increase in overdraft? There are so many things that you are there. Take off, gentlemen, open your shirt buttons, and there's that big S that says that you're Superman to clients. I have to be careful with that one because I can only say that to the gentlemen. But ladies, you're like Superman as well. Or if you like, ladies, you're like Tina Turner, simply the best. And so we need to be the very best because we are our client's #1 advisor. And yet, do we really justify that title? If 95% of our time is compliance and the value of that is diminishing all the time, I believe that we as a profession have the opportunity to stand alongside clients, metaphorically, as it were, hold their hands and walk them through the challenges of managing a successful business. So here's what I did years ago. I used to have 10 clients that were really great clients. What's an A client? You know what A clients are. They're the clients who pay you the most. They're the clients who have the highest turnover. They're the clients who have the highest balance sheet figures. They're the clients in your favorite specialist industries. You've got your own way of defining them. And I used to meet with these clients before their year end. The reason for meeting with the clients before the year end included the opportunity to ask this question. Tell me, what does next year look like? And what I'm probing for between you and I, do they have profit forecasts? Do they have cash flow projections? You see, we as accountants cannot possibly manage our businesses unless we have profit forecasts or cash flow projections or KPIs. So we want to see before the next year starts, can we put a footprint in the client's future, hold hands and help them across the threshold into the new year? We meet with clients after the year end. And you might ask this question. So what does the current year look like? What's the angle there? Do they need management accounts? Do they need a gross margin report or whatever? And then if these are your best clients, surely there are at least 2 other reasons why you would meet with that client during the year, where you're not doing compliance, but you are doing business advice. If Graham Lamont, 3-partner firm in the northwest of England, can do it for 200, you can do it for your top 10. You've got to have the motivation. You've got to have the desire. You also have to have the organization of your work. Henry Ford stood on the gantry watching the watching the production of cars. You could stand on the gantry watching the production line of your compliance work. Trust your staff, train your staff, hold them accountable, and meet with your A clients 4 times. Your B clients, the rump of your clients, certainly your business clients, meet with them. I used to meet with my B clients before the year end. I'd meet with half of them in 1 year and the other half the next. I would see all of my B clients after the year end. One of the things I'm hearing, which I find is sad and tragic and is sidelining us as advisors, is people who tell me, all I do is I just send the accounts to my clients in their Dropbox account or what have you. In other words, I don't see my clients. And I'm thinking, if you are not connecting with your clients, if you are not understanding the issues they face, either in business or personally, if you're not being their number one business counselor, then price will be the determinant. And you and I know there are always people who will do this stuff cheaper. C clients, these are the people that you perhaps didn't expect to meet, but some of them pop up. New clients, I always say, meet with your new clients 3 times. First meeting, you will manage to get all of your stuff together in terms of form filling and 64/8 or whatever you're doing now. Second meeting, 3 months after the first meeting, is how's the business going? And the third meeting is 2 months before the year end, going through year end planning. Charge them a separate price for it and let them know that you will deliver value that exceeds 2 times the price, or the client can set the price. Hey, there's a risk. Yeah, you have to deliver value in 2022. And we have to have a way of giving client service advice and commitment whilst letting the clients know what's in it for them. So this, going back 30 years ago, was how my calculation looked. I had 270 clients, 750,000 revenue. That's a summary of what I've said in terms of the meetings. And I found that if I did that calculation, I should have 29 meetings a month, except when I first did this, I went back to my diary and found out that I was having less than 20 meetings. And I decided that what I had to do was I had to live my life in accordance with my priorities. And my priorities were client relationships, client connection. Oh, and guess what? Not only were they happy to pay, but they'd also refer people to me, which enabled me to grow my business. So our next poll question, which the team are going to put up, it's a real simple one. I would love you all, because this is a test. You're going to say yes, thinking, well, that's what Mark wants to hear. Hey, do you know what? It doesn't matter what I think or what I want. I want to know, as you have been listening to me, 160 words a minute, 440 words in your brain processing. And what I want you to do is don't say to yourself, I can't possibly, because you have to live your life at the highest level of value if we're going to increase our profitability. So here we go with the poll question. Are you motivated to increase your visible face-to-face, eyeball-to-eyeball, kneecap-to-kneecap time? Team at Quantuma, I can't wait to see the poll. Wow, brilliant. I love you all. Fabulous. Okay, moving on. I've got 1.25 hours to do margin mastery. Let me just give you some background to this, because I have a little bit of time and I want to go through this carefully, because I believe I have discovered something that is unique. And I know it's unique because all the firms I work with, whether it's PKF, RSM, GT, BTO, I was told that there might be some members of BDO on this course. If there are, can I tell you that BDO South Africa have made with me a film of this, and I'm not saying it's free. I don't know what they're doing in South Africa price-wise, but they have massively increased their gross margin. The other thing is they've massively increased the motivation. So let me go through the background to this. I'm a practice management consultant, and for 25 years, most of the time, my clients have been accountancy firm owners. What do I do for them? In the early years, as I was building Practice Track, I was hired to do marketing advice. And then increasingly, I turned towards practice management in profitability, staff management, client service, holding of retreats, etc., etc., etc. And then I had a client in London, 7-partner firm, and I'd worked with them for 3 years. And the managing partner, one day said, the partners want you to stop working with them and start working with the managers. And so I had 16 managers and I'd never worked with managers before. So I wasn't quite sure what was going to happen. So I walked into the first meeting with a manager and I had a number of questions. One of them was, how long does it take for you to plan a job? And let me take you back. Sorry. The managing partner gave me the audit pack of forms that have to be filled in before the audit starts. And I looked at this pack, I think it was 20 pages long, you will know. And I thought to myself, oh my gosh, how long does that take to fill in? I could see it. In my mind, I thought it was 2 days. So I went into this first meeting with the manager and I said, how long does it take for you to fill this form in? And the answer was 2 hours. To which I said, are you serious? And he said, yes, 2 hours. I didn't believe him. I didn't say that. But when the next manager came in, I said, oh, as a matter of interest, how long does it take you? I got the same answer. Now, look, please don't get this wrong. I couldn't care less about 19 of those 20 forms. But one of those forms was the job budget. And I said to this manager, I said, so when do you fill the job budget in? Oh, 2 days before the job starts. How do you price it? Stupid question, he almost said to me. Well, it's obvious, last year plus inflation. Anyway, I just started to understand that there were some problems in the way in which this particular practice approached their audits. Their average audit price was £25,000, by the way. And I knew that they had some huge job losses. And I was tasked with trying to find out how to address them. Incidentally, here's what I found in business. Never, always, always, always seek to focus on fixing processes because people are never the problem. Focus on fixing processes because people are never the problem. And that's what I do as a process management consultant for the profession. I focus on what processes we've got to do differently. So I worked with all of these managers and I wrote a little booklet, which doesn't exist now because I only sold about 100 of them. And I moved on. And then one day I was working in South Africa and I was working with Grant Thornton. And the managing partner came to me and said, Mark, I've just done a seminar for partners. Mark, I want you to take our managers and hold a workshop. Yes, of course, I'd be delighted to. I went back to my hotel room and I knew I didn't have a course for managers. I mean, I've never worked with managers. And I thought, well, I've accepted this engagement. So I managed to take 2 sets of materials from my courses, bend it round, and I held this workshop with 22 managers. And I'm going to teach you what I taught that day. But I want to tell you that as a result of that first session, they increased their margin by 15%. And they said to me 2 years later, Mark, we want you to come back and do that course. And I knew that I had to write something that was different and bespoke. And so with their collaboration, in other words, they checked what I was writing, I created Margin Mastery. And if there's nothing else you get out of this course, I want you to understand that this is making a huge difference. And you're going to hear stuff that you probably haven't heard before. And in particular, you're going to hear solutions. So the course kind of starts off by talking about the fact that we use 20th century words in the 21st century that are no longer appropriate. And I said at the outset, one of them was write down. So we're going to look at that. But the other word that we use the word fee. And what we need to do is we need to use the language of the world. And if you went out into the streets where you live and ask young millennials, what is a fee? Possibly they wouldn't know how to answer that, because I think we're the only people left in this world who use the word fee. And what I say is, let's not create hurdles. Let's not create a barrier of mystique. Everybody else uses the word price. So guess what? We'll use the word price as well. And I know the word fee is ingrained in the profession, but we're now living in a new era, and we have to sort of just challenge what we're doing and how we do it. So Margin Mastery, which I wanted to make sure I spend time on in a minute. We have 7 minutes of time out, and it's now, I've got an hour, which is what I said to the team I need. So we're going to look at when your top line is not the top line. We're going to look at budgeting, we're going to look at write-downs, and we're going to look at all sorts of different things. And all the time, I am not asking you to change any of your systems. So there's nothing clever, there's no software, there is no change required in your systems. We have to come up with better processes with people, and that's what I think we do. So just a few basics. First of all, what are our clients' needs? And in order to discover what our clients are, we have to ask questions. And I've already given you a couple. What are your clients' greatest challenge? What are other people doing that are causing a problem? What's your vision? How do you see the year? What's your succession exit? What's your mergers and acquisitions policy? What's your product development? All sorts of questions, because questions enable you to uncover needs. So here's a little picture, and it goes back. The reason I created this was because with my children, I created a little game, and it was called Faith. And my wife was terrified of it. But interestingly, my daughter-in-law smiles when I do it with her youngest. The game is called Faith. And what we do is we take the children and we let them go as high up the stairs as possible, 5 or 6 steps. And then we say to the child, jump. And that's the moment I love, when the child or the grandchild looks at you and trusts you enough to jump, knowing that you'll collect them and that they will be safe. So I call it Faith. The two components of the game Faith are the child having confidence and trust in you. And the first point I want to make is that if your clients don't have confidence and trust in you, there is no professional relationship. So in answer to what clients are buying, having said that they're not buying ours, they're buying you, they're buying your team, they're buying the solutions that you bring to them. The next thing I want to say to you is just let's talk about your billing system. Remember I said to you that we must be so careful of the damage and harm that is caused when we make people deliver a particular percentage. And you'll see in this course how utterly wrong and harmful this is. Incidentally, in this particular company I've worked with in South Africa, and I've worked with a number of them now, we managed to halve the rate of managers leaving. So what we've got to avoid doing is taking our time reporting system, which I call a retail costing system. It certainly isn't a billing system, and we mustn't use it to threaten people or to make people work in a way that isn't healthy for them. So, for example, not charging your time. This first managing partner was unaware of it. And I said, I've got one of your staff members that says that she's working every night and every weekend. Incidentally, I noticed that she was married. I also noticed that she was probably under 30. And I just conjectured to myself, I wonder what her husband might think about the fact that his wife is working every evening, working at weekends, and then saying, you know, are you getting paid for this? And she says, I'm not even putting my time down. So we have to right size what our time reporting system is, and we mustn't use it to beat up on other people. So your time records are a retail costing system. The invoice that you send might coincidentally be the same as what is on your retail billing system. It might, but normally it isn't. So I'm working in South Africa, and this is a little sketch, but I'm not going to do the sketch now because it involves me standing up and gesticulating. But do you remember the Pistorius trial? And I told South Africans, many of us in the UK were gripped by it. Over in South Africa, it didn't faze them. They weren't interested at all in what was going on. But when you go into a court of law, you either take an oath, swearing on the Bible, or your book of faith, or just an affirmation. And in this, you promise to tell the truth, the whole truth, and nothing but the truth. And so you as an accountant, just imagine that you were in the box taking the oath. And when you've taken the oath, the defense perhaps stands up and says, my lord, Mr. Lloydbottom has just taken an oath, but can I tell you that I have here his timesheet? Because we have had a camera on him 24 hours a day for the last 7 days. And there have been many occasions when he has not recorded the time that he has spent on his clients. So on the basis that he's not telling the truth with his firm, how can we be sure he's telling the truth on this stand? Now, I understand it's stretching a point, but what I want to say to you is this, is that I go back to my second session or my third session, where I talked about the fact that we're not in a charitable organization here. You must charge all of your time. And yet this is a session where I'm talking about improving job margins. Yes, it certainly is, but we're not going to do it by misstating the time, because that is just creating problems going forward. We need to know the true retail cost, and then we can do things about it. And so please, in my court of law of time reporting, everybody in your company needs to report their time. Why does it matter? Well, first of all, time records have an anchoring effect. If I did a job for any of you and I came to you and I had £3,400 worth of time, you might be persuaded to bill the client 3,000. If I came to you with £4,000, you might be persuaded to bill £3,500, unless you have pre-agreed the price, which we're going to talk about. So the downside, so your time records have a massive anchor on your view of the price that you are going to charge. The downside of not recording time is people might get demotivated. People might feel unhappy. Therefore, people actually might end up leaving. And right now, this profession is facing a dearth of talent. And so we need to make sure that people aren't leaving because we're threatening them or giving them negative messages when it comes to time. Incidentally, remember 7% of what I say is accurately heard and remembered, and your brain has 440 words. What you're doing is not disagreeing with me, because if I'm saying something that's irrelevant to you, send a text message to somebody. What I want you to do, bearing in mind the change capacity that you have, is to identify what you could do differently. I'm not asking you to revolutionize your firm. I'm asking you to be evolutionary in the way you manage yourself. And so don't create pressure to not charge time. So I was working with this firm on one occasion, and the managing partner said to me, Mark, I have a partner who's only doing 400 hours. Anyway, and he said, will you try and fix him? So I went to talk to this partner, and I met him at 4 o'clock one afternoon, and I was talking to him about his hours, and this is what he said. It was a 7-partner firm. And what this partner said to me was this. He said, there is no point in me charging any more time because the firm is so big and nothing I do will make a difference. I went back to my hotel room that night in London, pretty much appalled at what he said to me. I really had never had anybody before or since say that to me. So I went back with a modicum of attitude the next day. And this is what I said to him. I said, we met yesterday and you told me that you were turning over 7 million. I said, you're not turning over 7 million. You're turning over 10 million. And he said, no, we're not. We're turning over 7 million. And I said, no, it's 10 million. Now, I realized there was no point in continuing this because we would just have, seen a deteriorating relationship. I said, let me explain, because the difference between 7 million and 10 million is huge. That 7 million is your top line. And what I'm saying to you is there is a fundamental fault line in the Luca Pacioli system of bookkeeping. Luca Pacioli, you'll remember, was the patron saint of the profession who codified all the single entry bookkeeping systems into the double entry, a system that's survived 525 years. So there's a £3 million difference. So the first thing we want to do is this, is that every year we want to create a budget for the potential time that we're going to be spending on clients. Now, if you've got a partner who did 850 hours, I want him to set a stretch budget. So a stretch budget isn't the 1150 that I was talking about earlier. A stretch budget could be 900. The point is that partner must decide, even if you cajole them and say we need a little bit more. You see, because this 3 million is a lot. And I know that if we review the time at partner meetings, you manage what you monitor. So the first variance is time. Now what I want to do is talk to you about why I no longer want you to use the term write down. Here's the problem with the word write down. I'm your manager and I bring you a budget of £10,000. You say to me, I can't possibly charge client A 10,000. The most I can charge them is 9,000. So you as the partner have decided that even though I have given you a budget and done my job as manager properly, you have decided something which is your call. And that is what we call a sales variance. Note, the partner is responsible for that. The problem with write-downs is this, is that partners tend to blame managers for, wait for it, dumping too much time on the job, while managers blame partners for not having the guts and courage to bill what the job is worth. In other words, these write-downs fall through the gap, with managers and partners having a modicum of conflict and not on the same page. So what I want to do is I want to take the two components of write-downs and call them what they are. So partners, you are responsible for the sales price and therefore the variance. Please do not ask your managers to reduce the budget, because I want the managers to deliver on their budget. I want them to own the budget. So now let's take that same job, budget of 10,000. I do the job, I come to you as partner, and the time taken on that job is now 11,000. In other words, I have a productivity variance of 1,000. So what I'm going to say to you is this: partners, you're responsible for sales variance. Managers, you're responsible for productivity variances. So that's the simple analysis. The numbers are obviously all made up, but the principles aren't. And it's the principles upon which I wish to build. Okay, the detail of all of this will be coming very shortly. You now have a 7-minute break and my timer is on. So I will see you in 7 minutes. Thank you. Welcome back. I've read a couple of your messages. I had 7 minutes on my timer, and you are quite right. The tingling noise was coming from my iPhone. My sincere apologies, that should have been switched off. Okay. Right. In answer to the question, which you haven't posed, but in answer to the question, who is margin mastery for? Okay. Okay. I'm just having a slight, I've got to turn my video on. Ah, I see. Okay. A little bit of an abortive start. My apologies, but I think that, okay. Right, in answer to the question, who is this course for? I would have said originally that I was creating a course for people who do audits. Very early on, when I created this full course, this firm put in an accounts manager who was doing financial statements, and in particular, they put a tax manager in. At the end of the day's course, I said to the manager, quote, "Was any of this relevant to you?" The answer she gave me was a surprise. She said, massively, massively. She says, "I'm going to go away now and do this, 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 and this." She had been listening and interpreting from what I was saying into her situation. So the principles within margin mastery apply firm-wide. So this is my first thing to ask of you. Is everybody budgeting consistently? Because I have found in firms that one person does it this way and another person does it this way. How do I find out? I get the managers together, and the managers have listened to my training. They know that I'm never going to repeat anything about a person because I'm focused on processes, not people. So the first thing to ask yourself is, are we budgeting consistently? And then what we need to do is we need to have a process. Well, what happens if something throws the budget? Because you are, by my definition, employing good managers. My definition of a good manager is that a manager creates a budget and then delivers on it. And this whole thing about write down, this whole tension between partners and managers is just an excuse for not managing properly. And we're eliminating that excuse. And now what we're going to do is we're going to help the managers to deliver on their budget. So my question is, what happens when, not if, something throws the budget? What investment, what processes do you have to manage the investment of time? So let's start off with my London client and 3 things I gained from that client. The first thing is this: make sure that managers produce budget that enables them to get the job done. Regardless of what last year's fee was, do not budget to last year's fee. Budget what it takes to get the job done. Now, the first thing to say to you is this, is that the DNA of managers is that managers tend to be very optimistic. So what I want them to do is to include a sensible PC sum to cover minor contingencies. Because remember, the objective of this exercise is to motivate the managers to create a budget on which they can deliver. And we need to recognize that there are certain things that happen that throws a budget. And we want processes that manage that. So the first thing is, I don't want to nickel and dime clients. So put in 200, 500, whatever the job is, come up with a sensible PC budget. And you've got good managers, so they're not going to be abusing the right to put in a PC sum. Secondly, excuse me, when I was in my accountancy business, I created a form called the job postscript. And it's a very simple form. It looks a bit like this. And because we tend to be people who love lists, and because management says focus on the top things like Pareto, you know, the 80-20 rule. So I created this form called the job postscript. And the top part of the form is like it's a little sort of introduction. What do I need to know about this job? Well, turn up early, don't leave the bank statements out or whatever. But the second part of the form says this: what do I need to know to beat this year's elapsed time on the job? This works on the principle that if I was to do the job again after I've just done it, I'd be smarter, and there'd be 2 or 3 things I would do differently. Don't give me 10, because that's just going to be ignored. But we're sending a message to next year's AIC, accountant in charge, and we're saying to them, do these 3 things and you will not spend as much time on this job. So it's a carry forward. It's one of the last things the manager does, or the senior says to the next person, could be that person, him or herself. These are 3 things. It's a job PS. Then the third thing is this: going back to my 7-partner firm, I was horrified. I was horrified at the process that says that you don't do the budgeting until the job is just about to start. Here's what I want the managers to do. I want the managers who for year after year after year have sat on a 30% write down, taken all the flack from the partner. Forgive me if I'm misdescribing partners. But what I want the AIC to do, I want a line budget, assuming 6% inflation in the current year or whatever. And what I want to do is I want to give the partner, assuming it's taken 4 months from the year end to the sign off of the job, I want to give the partner 8 months to discuss next year's price with the client. Now, there's lots more strategies coming, but this is what I got out of this particular firm, and I've used it ever since. Make sure that the partner knows that at some point in time, we're going to be focusing on another write down. Sit down with the client and review the price. So let's see how we can improve the recurring write downs. First of all, I've worked in firms where a manager will say, one partner wants me to do this, but another partner goes me and asks me to do 3 times as much. So the first thing is this: are we over auditing? And ask that question across all the managers. Let them answer the question. Do you think we're over auditing? Secondly, are we double reviewing? I've got a client with 52 partners here in the UK. This was his point when I showed him my 5, and I said to him, so tell me how double reviewing happens. And he said, it's when managers and partners just keep on reviewing the same stuff. Thirdly, can we identify any additional preparatory work that the client could do? Are there areas where we're consistently having to fix client-caused problems? Next, the partner to meet with the client to seek a price adjustment. Now, let's look at 20th century terminology. In the 20th century, what we said was, we need to increase the fee. That is so inflammatory. So what we do is we take the word increase and we use the word adjust, and we take the word fee and use the word price. So we need to talk to the client about adjusting the price. Next, if all of that has failed, and if the write-downs are going to continue at over, say, 15 or 20%, the partner needs protecting. And so we're going to put the responsibility at the feet of the managing partner, who together with the management team will adopt and sanction write-downs of X. But as a final resort, you have to ask the question, do we need to move the client on? So those are some initial steps to look at how we can reduce recurring write-downs. Let's take a job. This job has a fee of 10,000, and you can see that there's £11,000 worth of time on it. So I hope it's fairly typical. There's time on the job before it starts, there's job and partner time. And my question is, which 1,000 is written off? And the truth is, you haven't got enough information to be able to work that out. So let's have a look at the 1,000 that's on there before the job starts. This is high quality time with the partner or the tax team talking to the client. And the normal approach is to wrap it up in the on-account bill that you send before the job starts. Here's what I want you to do. Before that first 30% in advance fee is sent out, before the client forgets all the good work that you've done, before you forget all the good work that you've done, I need you to bill that time out. So wrapping it up in that first on-account bill is just disguising the fact that you're now taking time that is possibly normally included as part of the accounts or audit bill. So we're going to make sure that it's not the time that is on the job to start with. Secondly, and forgive me, I have feelings about this, because when I learned about the 85% rule, I found that it was somewhat demotivating, because the problem with the 85% rule, as good as it is that whenever the job lands on the partner's desk, a very simple person like me says, but I'm not going to get paid for my time. And that's outrageous. I used to think, God, boy, am I good at working with clients and helping them. So what we say to the manager is this: I want you to ring fence my time. I want to know that my budget is sat there and nobody else is using it. So we're going to make sure it's not that 1,000. And this is where you think I'm setting the managers up. So let's have a look at technology. Most, not all, most software programs accumulate time. And the problem with the accumulation of time on is that there's no psychological driver with regard to managing the time. So here's what I want you to consider, maybe on some of your bigger jobs. What we're going to start doing is we're going to start depreciating time. So we've got the budget. At the time was 9,000. The budget must have been 8. And still you start to see psychologically the manager is working and they get to the end of week 3 and we want to know how much time there is left. And so is it possible that week 4 was 3,000? Well, that would be typically what normally happens. Let's see what we can do to address that and fix that. So first things first, we take our car into the service reception, and probably, if you're like me, you drop the car off around about 8 o'clock. You hand it over, and then, wait for it, at 9:25, you get that phone call, and it's the receptionist, the service receptionist. And she says, we've been servicing your car and found out there are 3 things that need fixing. Well, in fact, the service dealership has now moved on. I know for a fact that BMW and VW dealerships are now sending a video. And you click on the video and you now see a little video of the part that they say needs replacing. And you click further and they've got the price, and you click further to accept and authorize them to do the job. In other words, the service dealership has improved their process so that they are no longer having to have difficult conversations saying that can't possibly be right. You know, they're now able to use a video. When my 52, the chairman of this 50 partner firm read about this, and I talked to him about it, he said, we're now going to start sending pictures to clients of where their records are. And I've never followed up with him, but I'm sure knowing him, he did. So here's the lesson from service reception. And we're going to build on this and all of these principles, that the service receptionist has improved their process. They've identified the faults, and upfront, before the work commences, they actually discuss this with their customer. So what we need to do is we have to avoid scope creep, because typically most accountants don't agree a price with the client until the end. The most outrageous case I can give you is of one client where the manager told me we had overruns of £100,000. I went into the meeting with the partner. The partner ended up embarrassing and rubbishing me and walked away with £2,000 in extras. That just cannot be right. So my question is, do you contact clients when extra work arises? Firms who do contact clients don't actually do it consistently. Do you have engagement and pricing letters that say that the price will only be the price provided you deliver records in this manner? So the application of this lesson and some of the exercises that we get the managers doing is this. We say to the managers, we want you to go through 5, 8, or 10 of your files, and we want you to identify the recurring extras. And then what we want you to do is we want you to determine a minimum and maximum price to fix that. And then the partners are giving you the authority to contact the client, advise them what needs fixing and the price. We talk about the ego trip trap. Let me explain that. A job gets finished, it goes to the manager, and the manager picks up the review sheet and starts to think, oh my gosh, how could they have done this? How could they have done that? And part of the quality of a manager is determined sometimes by reference to the number of review points. That all takes time. They give it back to the staff say, what the heck's this all about? And then the job goes to the partner, the big P. The partner picks up the review sheets. He also is a chartered or certified accountant and comes up with more review points. This all takes time. So here's how we fix that. I want you to go through your files and identify 10 common recurring review points. This needs a little bit of training internally, but I want you to identify 10 recurring review points, and then everybody takes the oath that those review points will never, ever arise again. And once we've nailed those 10, we might even find 5 or 6 more. But I want you to make sure that whether it's a manager or a partner review point, that we identify so that people are not forever getting the same note. And what we do with some of our clients is that I'm a great believer in what I call vision navigation. Vision navigation involves putting A1 charts on the wall as constant reminders of what staff need to do differently to produce a quality file. In fact, I'm working as we speak with a 3-partner firm, and they're focusing on trying to reduce the partner review time. So I'm working with 4 managers, and I've just sent the chart, the A1 chart spec, off to my designer to create. And what we're saying to the 4 managers is that we want you to be influencers, and we want you to find 22-person company. We want you to find 2 or 3 people that you are going to influence and talk to them about improving the quality of their work. And so we have this poster that we're creating. It's going to go onto the wall because that's vision navigation, but we also have a slightly longer crib sheet which will be given to each member of the firm. I visit the firm middle of May, back end of May, and we're holding a staff meeting over 3 days. And each day the managers are going to talk to the whole of the staff about what they've learned and what they want the staff to do differently. The reason we're doing this is because I have a partner, one partner, the managing partner in the firm. She works 364 days a year. I promise you she does. And she's just been incapable of doing anything other than working on jobs. So I said, let me work with your managers and we'll see if we can make a difference. Time will tell. So review points are like a snowball. This is all high-end, expensive time. So this involves time and money. Oh, right. I just remembered. My time, I was the lead manager for 3 years on Clark's Shoes, who are based in Somerset. Clark's, you will know, was one of the largest, UK's largest private companies. And I went in to manage a team of 12 people X years ago, long time ago, 25 years. Here's what happened. I would have the team on site at Clark's for about 12 days. And then I was literally doing real-time reviews, and they were fixing all my review points. At the end of 12 days, the partner came from London, and every single review point had been cleared, and all of the team left. So I was left with the partner, the tax partner, and so it's in my interest to make sure that I'd identified all of the review points that were necessary. But the point is this: we finished the review at the end of the job because the partner came on site. And so anything we can do, typically what happens, this may be true for you, is that 80% of the time on the job is delivered in the first 20% of the time. So let's just take an example, £10,000 job, and £8,000 of that is delivered in the first 2 weeks. But the 20% might take the partner and the manager 3 weeks to sign off. So you're with me, what we want to do, because when your job sheet is open, it's like the snowball. It's carrying all this time every time you think of the job. So trying to reduce the amount of time, I think ultimately in this profession, just the same as the car dealership, you ask the car dealer, when will my car be ready? And in the end, I think taking hold of client work and sitting on it for so long is not going to be sustainable. Let me just say to you, and you will know what your numbers is. Typically in the UK, accountancy firms have lockup of 25%, sometimes more. So if the annual fee is 10,000, work in progress and debtors are often in the region of £2,500. Here's the fundamental client service problem with that, is that your time is probably at a peak before you're signing off the job. So when you sit down with the client, your motivation for selling additional services is not that great. You want to finish the job off and get paid. Equally, the client's motivation for committing to more fees when they know they haven't paid you and they know you're just about to send another bill is not that great. So many firms are taking direct debits for work. Many firms are changing their billing systems so that their lockup comes down. Ultimately, it's my view that you should have lockup of no more than 18% of your firm's gross income. So look at the variance, look at your annual turnover, add on the VAT, take 18% and do all you can. Because if we want to super serve the clients, if we want to run profitable businesses, we have to be able to deliver higher value services and we have to get paid more quickly. You see, our work in progress depreciates in value, typically at the rate of 3 to 5% a month. So billing promptly is massively important to job profitability. Okay, so there are a few options. What we used to say to the managers was create a list of 10, and we'll either put it on the post or on the intranet or a file checklist, which I tell them I can't stand checklists on files because you already have so many of them. And that's an example of one of my clients. Do you do it? I mean, I said to them, why is this important? Anyhow, this was a client-driven checklist reviewing annual financial statements. Okay, next thing. All of your staff go on the job. Here's what I want you to think of doing. A two-part form. First half of the form is where your staff say that instead of you saying to them, you don't know how to do this or you don't know how to do that, let the staff, bottom to top, give you feedback. And the feedback is, as a result of completing this job, there are 3 main areas where I feel I need further training. And here's what the managers do. Maybe once a month, they collect all these training points. They do a lunchtime training session where we use a bit of the staff time. We might even buy them lunch. Training is a joint venture. It's not all about the firm shelling out money. Staff need to recognize that we're doing a lot for them. And I know that's a hard proposition in 2022, but it's a partnership and we need to collaborate together. I don't see why the firm should always do everything in firm's time. People value what they personally pay for. And I think taking 20 to 30 minutes of a staff time, letting them have a few sandwiches, and anyway, I'll leave that with you. So I'm going to show you on the screen probably the fulcrum of what we do with firms. And we call this thing the job margin report. And in the left-hand column, we ask managers to go back and identify the variances that arose last year. So if you look at this job, you'll see what the fee was. You'll see that the time was 200,000, and the managers are asked to identify how much of this was a productivity variance, how much of this was a sales variance. So they go through and identify those variances, and then they overlay their current year budget onto the right-hand side, where they're showing what price increase is required to enable this job to break even. The firm also acknowledges that there could be a planned write-down. In other words, that it can't all be driven by pricing. Here's what we find in using that form. Managers in the firms I work with are highly motivated. And the reason they're motivated is because they're good managers. They produce a budget. We've said to them, look, if you need to ask the client to do the work, ask the client. If they say no, then you can say, well, we'll do that, but it will cost. Then at least the client has a decision. If problems arise on the job, the manager is the best placed person to address these with the client in the same way that the service receptionist, the service manager, addresses with us as their customers some of the things that perhaps need fixing on our car beyond the service or perhaps the MOT. We talked about the depreciating budget. I want them to be very tuned in to the reducing amount of time which they created. And so they now have an active interest in connecting with the client and talking about the things where the job is right. If little things go wrong, that's taken care of with the PC budget that they have created. The pressure from all of this is relieved on the managers. And I have great pleasure in telling you that it puts the pressure on the partners, on the price. But guess what? It's the partner's business ultimately. And so the partner has the right to take a pricing variance. The manager has to do everything they can to fix the productivity variance. I have, out of all of the partners I've worked with, I've only ever had one partner who has reacted to this introduction, and we cannot manage to the lowest common denominator. Partners are happy with the transparency, managers are motivated, they no longer have to work at home if they do at busy season and not account for their time. So moving on, the managers are closely connected with the client. And so what we want the managers to do is to identify a list of 5 SEO opportunities. Normally that stands for search engine optimization, but here it stands for service enhancement. So the managers and their team are working with the client. And what we've asked managers to do is to identify 5 core services that they can routinely look to offer to the client. The difference is that we actually ask them to create this list and then give it to the partner, so that the partner is involved in, let me use the word upselling, but I could also say and should say upserving the clients. So we take the expertise and the awareness that your team have, and we say, look, these are areas where we can help. It's really tough for people to do this when they're under the pressure that so many firms are under. But if we recognize that super serving the clients and giving them additional value is of importance, then we're going to try and go the extra mile. I saw one firm recently in the UK, a 6-partner firm, and they had on their website about 60 services that clients could buy. I wrote to the managing partner and said, could you tell me, out of all those additional services, how many of them generated more than 1,000? And I'll be really honest with you, I haven't had a reply. So I think we just need to, I love Pareto, drill down. Don't give clients a smorgasbord or a menu. It's like when we go to a restaurant, we see a full list of all the things that the restaurant can do. What I want you to do is, if you like, create a menu for the day, which always is much shorter. And so get your staff involved and motivate them that this is an area where they're not just doing compliance work. So here's the second part of that form. The first part, if you remember, was about training opportunities. The second half of this A4, it's a form on the file, it's 1 page. As a result of completing this job, I think we should discuss with the client the following service extensions. This is the service, this is the problem it will solve, and this is how long I think it will take. Wow, we are nearly at the end. If you have questions, comments, other ideas that you can share with your fellow practitioners, because we're all in this journey together. We're all facing challenges. Let us be prepared to help one another. So I've talked a lot about KPIs. I talked about challenges in the profession. We've come up with the importance of client service. We talked about spending more time, high value time with clients. I talked about being prepared to go on a journey of self-development. I've tried to give you an overview of margin mastery. It's actually a 7-hour program, and it includes a 2-hour program for partners, which includes some sales training, and it's a 5-hour program for managers, which includes breaks and the opportunity to have discussions. And then we talk about the margin mastery form, which I showed you on the screen. So the question which you have on the screen is, okay, just taking a moment, trying to avoid the hurdles that you've put in yourself. Can't possibly, somebody else will object. What can you influence in the first instance? Let's be those people that take the lead and show that we can do things differently. You might be the managing partner. Remember, change energy. You know, we can't just suddenly dump masses of change on people. They've already had to cope with so much change since the 23rd of March, 2 years ago. So the question on the Zoom is correct. The one on my screen I should have changed. Quantuma did tell me and I overlooked to do that. So single choice. Do you believe you can increase your firm's profitability? At the end of the day, you increase profits by increasing revenue or reducing costs. That's so simplistic. I hope what I've done is given you the strategies, the techniques, the motivation. Just think, at the end of the day, we are all of us heading towards the day when work is no longer the first call of your day. We may or may not have a robust state pension scheme come the day you retire. Who knows? What I do know, incidentally, is that anybody who tries to forecast the future is only ever guessing. What I want to encourage you to do and for you to believe is that as high quality accountants and as part of Team Quantuma, I know that has to be the case from the size of firms that are here today. I want you to make that commitment, and maybe it'll spread from you, if you're not the lead partner, to other people. The course is available online. You might even say, you know, just listen to the end bit rather than everything Mark had to say. But this is 3 hours only. And I want to believe that I'm bringing the experience of 35 years. I'm bringing the engagements that I've done with some of the world's global firms. I know this has been hugely successful. They've been chasing me recently saying, now that you can move around, please, please, please come back. So I'm traveling around America and Africa next month, visiting some of the clients that I've only been seeing online. So Team Quantuma, would you like to post the responses? And the responses are brilliant. 21%, 1 to 10%, 63% up to 15, 8% and 8% for 20 and more than 20. I think, I'm going to say, I think you've invested your time well. I hope you find that my input, don't worry about my style. If you don't get on with my style, it's not about who I am. It's about experience that I'm bringing, the relevance to you. And it's an honor to have been working with you. And I hope that some of what I've shared will make a difference. I have a history of seeing firms succeed, but it's not what I say, it's what you do. Remember, it's not what you know, it's what you do with what you know that counts. Remember that all the principles that I've shared, take hold of your notes, your ideas, but above all, make sure that you make a commitment. Here's what I do. The weekend is coming up. If not today, maybe sometime over the weekend. Just look through the manual, which I think will now already have been posted into your chat box. Download the manual, send it round to as many people in your firm as you want. Quantuma will send you the link, I think, and make it available, possibly at the latest by the beginning of next week. And I wish you every success. If ever I can be of service, my email address is simple. It's mark@marklloydbottom.com, and all of my online training programs, including very comprehensive manuals, are available at ignitepracticemanagement.com. Finally, I think some of you have been posting questions, so I'm going to quickly address those. Okay, Simon, you mentioned charging by time. However, please advise me on the subject that some people work for. You're quite right, some people do. That's why value to the client is so important. I mean, I might take 2 hours to fill a tax return in, somebody else take 8 hours. It's not fair to charge the client 8 hours when it can be done in 2 hours. So that's just human nature. How does one measure effectiveness and efficiency when recording time? The truth is this: training, Simon, is massively important. Identify areas where the firm needs to improve its team's processes. And then, what you can, okay, your questions are appearing and disappearing, Simon. I've got a question here. So training is the key to it. Direction, always find people doing things right. Don't find people doing things wrong. Be an encourager, set high standards, use vision navigation, be willing to spend time with people, and understand that our retail costing system isn't the price. I think we misunderstand the purpose of our costing. Increasingly, there is transparency in the marketplace with price. I believe that ultimately firms will have to put those two dreaded words on their website, prices from. You might not agree with that. I kind of hope it doesn't happen, but I think it's inevitable. People are already doing that. Non-chargeable time is anything that isn't related to client work. It certainly isn't anything to do with clients. Anything to do with clients must go down as client time. Okay, do I have more questions on there? I don't find it easy to navigate. Okay, Simon, I think, sir, you are the only one that has actually posed a question. So thank you very much for that. In the chat box, Matt, has the timer been turned off? It was your note that actually helped me find it. Is there any chance we can get the ringing vibrating? Yeah. My apologies. Okay, I think at 3 minutes to 12, first of all, I know that if a course goes on, you tend to look. If you would like in the last 3 minutes to have any other input from me, I'm always happy to respond. I have one more message. I'm going to make this the last one. Oh, right. It's my team. Yeah. Yeah. Okay. I think with that, I'm going to leave you with your manual, leave you with the rest of your day. Trust you have a great weekend with family, friends, or those who are special to you. And maybe one day we'll meet again. Quantuma, your team has been excellent. Helen and Marie and Caroline in particular, it's been a privilege to work with you. And thank you too. My best wishes for all of your future success seminars. Thank you.